Hello traders, Gary Wagner here, just about 10:05 in Honolulu, 5 minutes after 4 in New York. It is Monday, October the 3rd, 2016, and this is the Daily Report for Gold and Silver. We have moderate downside pressure in the precious metals markets, with gold trading off about 0.2%. First, let's take a look at spot at 13.12, 13.13. As I said, putting it down $2 to $3 on the day. Low on the day has been 13.09 and change, and the high 13.19. So another day with about a $10 range. Let's take a look at gold futures. 13.50.50, off about $1.60. Now it is coming off of a low of 13.1180 with a high of 13.2260. A net change about 0.1% drawdown. When we look at silver, silver is off actually pretty hard at 18.87, off almost 2%, 1.7 in terms of the actual drawdown, about 34 cents. Of course, this is the COMEX. When we look at spot is trading off same amount in terms of percentages, 1.7% lower, 32 cents at 18.82. So traders, I do want to start today's show by looking at a daily chart. This, of course, is of COMEX futures most active December, and it is in standard bar chart format as opposed to candlestick, which is what our primary chart structure usually is. Now, the reason for looking at the bar chart is what I want to focus on this particular chart are the series of lows that we have seen recently, and bars do that quite eloquently because we're not really focusing on where the market opened and where it closed, although I do have hash marks to the left and the right to signify those points. But there's absolutely no doubt when we look back in time, this of course being June, this being July, August, so September, again, 1st of September, and then, of course, about the middle of September, and here we are, October, once again, kind of flirting with these price points. If you recall from our show on Friday, we talked about the fact that this is the area that I want to look at to buy gold. Now, silver is a different story, and we'll talk about that in a second, but the key is this. If the market, which has come down and hit a low today of roughly 13.1180, so call it 13.12, you see these lows at around 13.08. 13.08 seems to be the area we want to buy at. So will this market kind of drift a little bit lower and then move back up? And that's kind of what I'm looking for, because that's what would signal or trigger a buy, I should say, in the market. Now, we have to acknowledge that we have some key differences between the way the market was trading at the beginning of the year and the way that it's currently trading now. We made a boatload of money at the beginning of the year, and we did that based upon the fact that we hit these lows back at the end of December, beginning of January of last year at around 10.50. Our long-term models put our lows at around 10.37, so we were definitely within the parameters. 10.37, if you take a look at this slash mark, the slash mark comes in at 10.40. Of course, there really weren't any lows right here, but we came very, very close to that price point. So the fact that we could really ride this up, and this was an area we made a tremendous amount of profits, and then this particular rally here, we also made a significant amount of profits. On the last couple of trades, yes, we have made profits, but they've been slight profits because we saw the market peter out, so we only caught a small amount there. And the last trade here, we only caught a small percentage, I should say, of this price move, because realize that we were looking for a breakout and a breakout to the upside and to break above these standing highs that we had, which is our record high this year at 13.76. However, we haven't seen that on the last two trades. So we're going to approach this one a little bit differently. One, if the market in fact comes to this particular price point and then we get some sort of a V, meaning a pivot point or a key reversal, what I mean by that is the market comes down and we see it bounce off with a defined low, and typically that will come at a very, very important fib point, which is what we're looking at here. And then at the same time, we would look for some sort of a candlestick pattern, whether it's an engulfing bullish, three river morning star, to occur right in here. That would be our trigger point. The key on this particular trade is we'll trail our stops up as normal, but we'll also probably put a price order in to get out at a certain price, so that if we can get in, say at 13.10 and out at 13.30, 13.35, well, of course, now we've got about a $25 trade. And a $25 trade, if the market's trading within a 30 to 35 point range, is a significant portion of that. And the key to that is the caveat, I should say, not the key, but the caveat is if the market clearly just breaks out and breaks above that. Now, fool me once, so to speak, but it hasn't done that for the last couple of times. So what I am looking to do, as I said, is to buy roughly in this area and to sell, which is around 1305, 1308. To buy there, and to sell roughly at 1325 to 1330 effectively. We'll send out a trade alert to that effect. So traders, as I said, silver is something else completely, although I am looking for a area to go in and to buy gold right now. Silver, in terms of our technical studies, has absolutely broken below a long-standing support level today, and I draw your attention to these lows that we had here in June. If we carry them up and attach them to these most recent lows here, and that would give us our lower level support line, we can clearly see that we have broken below that. This is our upper level resistance line, and we certainly haven't come close to that. Now, we are close enough to the apex that this could be a clear and defined break to the downside. If that is the case, the first particular area that I would look for is around 1820. Market's trading at about 1880, and it's simply based upon these lows. The next level below that would be a 38% retracement, which is 1819, comes in right here. There's our 38% retracement, and that's a retracement from these lows of 2016 at $14, just below 14, I should say, to these highs just at around $21 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.